Happy holidays, traders. Welcome back to another video. It's Manuel from LiveFree Effects. In today's video, I'm going to be sharing a swing trading strategy that you can use whether you're a beginner trader or a seasoned trader. This is not just a theoretical strategy, but more so one that has a process of engagement. I'm also going to be sharing some of the things that you want to keep in mind when you are swing trading. Let's waste no time. Let's jump right into the video. When it comes to the strategy that you're trading or swing trade strategy, it's important that the very first thing you consider is the pair that you're trading. Is it conducive to your objective or even your particular trading strategy? Once you've picked the right pair, we're going to be taking a look at doing the breakdown, right? Analyzing the market before you dive into the actual strategy that you're going to be using to execute. The very first thing when you're taking a look at the chart, is you want to identify who is in control of price. And the best way that we can do that is using the higher time frame. Any key levels that you take from the higher time frame will always be stronger than key levels that you take from the 1 hour or the 30 minutes because higher time frame is key. So as we take a look at the market here, we identify who is in control of the market, and we know that buyers right now are currently in control of this market. The trend is up. So we can take a look at the left as well, and we can see, yes, we've had some pretty significant push to the downside, but overall on a long-term time frame or on a long-term scale, right now we are simply just moving sideways and the move is still relatively up. So right now, from just what we see here, right, because the daily time frame, each candle represents 1 day, what we see here is that the trend is up. Price is having a little bit of pullback, but now we want to read into the details a little bit more. And this is where your confluences come into play. The very first confluence that we're going to be taking a look at is support and resistance. When you're on the higher time frame, like I said, any key level that you draw will play a significant role on the lower time frame. So when you're setting your support and resistance level, what you want to look for is the more price points that have interacted with your support and resistance level, the stronger it will be. So it's always best to look left, and from the left we can see that we had a push down here. This played as support, and price finally broke through this price point. We traded back into this level, which acted now as resistance, and we saw the market trade lower, and then price consolidated a little bit before using this level to push to the upside. And now we've pushed to the upside and we've simply traded back into this level. We've identified a support level. Use another confluence that you want to use as well is market structure. Paying attention to the market structure is critical. So when buyers are in the market, they're making higher highs and high lows. And when sellers come into the market, we start to get the change in market structure. We start to see price creating lower lows and lower highs. And when sellers hit a key level, right, we can now see a change in the overall market dynamic. And in this case, we hit a support level, and now more buyers are coming into the market and they're taking out this high. So what we can see here is that on the small, as you pay attention to the small detail, there is a change in the overall market direction. And now we've seen a pullback. So as we scale down to the 4 hour time frame, what we did on the daily time frame was to identify who was in control of the market, figuring out the trend, using market structure to see the little breaks that has taken place in the market in terms of price. And what we also did too is plot our support level. So this is the real separating factor between a strategy that works and a strategy that doesn't, is having a process that is going to allow you to interpret what price is doing. That process is your process for breaking down the market. Where your strategy comes into place is now when you are looking to execute, right? Because you've used the confluences, and some of the confluences that we used is support and resistance, market structure, and the highs is where now we've used, because the highs will be our target if we are buying, and the market structure allows us to say, okay, you know what? Price took out this high, and now we've seen a pullback. So what that means from a market structure standpoint, when we get break of market structure, is this, boom, and that. So we know what we can likely anticipate. And the most important thing is we are also at a critical support level. So with that information, we can scale down to the 1 hour time frame and say, hey, I'm going to look for possible buying opportunity. So now you're starting to move into your execution approach. And I always recommend having 1 or 2 strategies that you use to execute. One of my favorite strategies is the accumulation and distribution strategy. And what I like to see when I'm looking at this strategy is for price to go into a consolidation and to break out. So as we're taking a look at the 1 hour time frame, with gold, a lot of the liquidity will flow during the London and New York session. So that is when I want to reserve my capital, because the odds of price going in my favor or price moving well is in that time. What we can do now is even scale down to the 15-minute time frame, and we're seeing that price is at a support level. Since price is at a support level, a lot of traders will just buy. Personally, for me, what I like to do is wait for my strategy to come into play. If price gives me the opportunity, sure. If it doesn't, then it's okay. So like I said before, what I'm looking for in the market is 1, my session to come into play. I trade the New York session at 7:30. That's when I'm looking for opportunity. 7:30, 8, 8:30, 9, I'm looking for trading opportunities. So what we can see here is we're already seeing some consolidation in the market, right? And it's 1:30 a.m. Eastern, which is the London session. Right now, the London session is in full effect. So this is about 3 a.m. If I was in the London session, this would have been an opportunity that I would have taken. But since I am not in the London session, I'm not trading the London session. I have to wait for the New York session to see if an opportunity is presented. What we are approaching now is about 7:45. So this would be my time to be in the market. And what we can see is price trading back into this level. For my strategy, the accumulation and distribution, what I'm simply looking for is for price to accumulate, break out, and retest. And what we're seeing here now, we got the retest in London, and now we got the retest in we're about to see the retest in the New York session in terms of what it looks like, and we're about to see the retest. So what we see is price trade into this level, and now the market is bouncing back. So now this is an opportunity for me to use everything that I have gathered from the higher time frame, mapping out my key levels, which is my support level, and taking a look at the market structure, and now coming down to the lower time frame, the 15-minute time frame, to get in on my position, because it allows me to minimize my risk. So even though you are swing trading, you also want to use the lower time frame for your entries as well, because it will allow you to get just better, more refined entry. And the main reason too is it'll allow you to get what I call sniper entry. So if you're looking to get sniper entry, a lot of the time you might not be able to do it on the 1 hour or on the 4 hour time frame. You can do it on the 5-minute or on the 15-minute time frame, depending on the currency pair you're trading, even the 1-minute time frame, because changes happen a lot quicker on those time frames before you see them on the larger time frame. So we've seen our accumulation and distribution strategy come into play. I usually do an average of 30 to 35 peps, and we can say this is it. So do about 36 peps on gold, and yeah, let's see what price does in this case. Obviously, we know that this is one of our targets, right? So we can go over to the higher time frame on the 1 hour time frame. This is a huge target, by the way, because it's gold. This is like over 400 peps, and we're risking essentially 30 peps. So if we don't want to set a huge target like that, what we can do is we can use our fibs to see, okay, what are some levels that we can also target as well. When I don't want to use the highs, I also use my fibs as well. And the 1.618 is always a great place to take, some profit. So what I could do here is I'm risking essentially 30 peps to make even 160 peps, 150 peps. That's good. And let's see what the market does in this scenario. Within 2 hours, our first objective was hit. That's the power of having a process that allows you to break down the chart and then put in your execution strategy. Having one or two strategies that you will execute with. And the accumulation and distribution strategy is one that I have done multiple videos on. I have posted me making money using this particular strategy. So it's not something that I just started doing particularly in this video. It's been a part of my trading process, and it's been one that has worked, tremendously. So using this strategy is something that you can do. I always recommend testing it, to see the pair that you're trading. If you're trading gold, it works tremendously well. But if you're trading a different currency pair, I always recommend back testing it, collecting samples to see how it works. What you're looking for is a range bound market, a breakout, and a retest into that level, and you take the trade on the retest with your stop loss at the middle, or simply at the low point of that, depending on what your stop loss is. That's simply how you do it. And if we want to see where price goes, we can kind of watch and see the market. See, what I like to do after my objective has been completed, I like to move my stop loss to break even. If I have, maybe this is my first objective, right? If this is my entire objective, I'll close my entire position. But if price moves in my favor, maybe 30, 40 pips, if I was day trading, I'll take my stop loss and move it to break even. But since we are swing trading, we're aiming for higher objectives. If a big level has been hit, maybe in this case, we got 160 pips, I think it's still worth closing something, taking profit, some profit, whether it's 10%, whether it's half your position, moving your stop loss to break even, and then, seeing what price does. If price continues to go in our overall favor, we can go over to the 1 hour time frame. So this is a much smoother and faster move. So there we go. So yes, we are able to get our move, in its entirety. But what we used is we used the lower time frame for entry and used the higher time frame to figure out, how we are going to interact and how we're going to engage the market, how we can anticipate certain things, and our lower time frame was just used for execution. So when you're swing trading, ladies and gentlemen, these are all the things that you can do, whether you are trading gold, whether you're trading euro, and whatever you're simply trading. And to remember, never let profit escape you. If the market gives you something, whether you're swing trading, always try to take something off the table and put yourself in a position where you are actively managing your trade and putting your capital and making sure you're reducing the exposure on your capital. And that's the video, ladies and gentlemen. Thanks for watching. Hope you found this video insightful. If you have any questions, feel free to leave a comment down below. And as always, I am cheering for you. It's Emmanuel from LiveFree. Peace.